Welcome everybody to our course on RegTech for compliance in the money transfer industry. It's good to have you back for this 1 hour session. Now, during this session, our experts will be discussing and exploring the key topics. For those joining online, you can submit your questions via the Q&A button on the right-hand side of your screen at any point during the course. We're trying to answer as many of the questions as we can at the end of the session. And for those of you in the room who would like to ask a question, you can do so by putting your hand up and we'll get a microphone over to you. Now, for this session, you can join our compliance experts and learn how to navigate the tricky maze of regulations within the payments and remittance industry. Now, including up-to-date compliance regulations and standards for MSBs, RegTech, and its benefits in enabling MSBs to comply with regulations, and the main areas to consider when developing or choosing an effective compliance system. Now, today, we are very pleased to introduce our expert panel. Firstly, we have Oussama Kseibati, Head of Sales, RemitONE. Oussama is the Head of Services with over 15 years of experience in the industry, offering UK and Europe licensing and remittance software globally. RemitONE are leading the field in innovation and technology, bringing supply chain members together from around the world to build bridges and connections. Here for Oussama. Now we have Kathy Tomasofsky. She's Executive Director of the Money Services Business Association. Kathy has held various senior systems management level positions at the Network Branded Prepaid Card Association, USF&G Insurance, and First National Bank of Maryland, and was an advisory board member to the International Association of Financial Crimes Investigators. Please join me in welcoming Kathy Tomasofsky. Not bad, I said it twice. Okay, and moderating today's session, we have Ibrahim Mohammed, who is the independent payments consultant for Finxplor. Brilliant. A highly passionate payments professional with over 20 years experience in money transfers, prepaid payment cards, covering various areas related to operations, technology, compliance, product, and business development. Ibrahim is an independent payments consultant, providing specialized consultancy in the space of payment innovation to startups and incumbents. Let's hear it for Ibrahim Mohammed. Over to you.
Thank you. Good evening, everyone. The good news is this is the last session before our award ceremony. But the not so good news is I am still there for 1 hour along with my co-hosts. So please bear me for the next 1 hour, right? Before I start, I would like to know how many of you are from compliance or work closely with compliance. Can you raise your hands, please? Okay, great. Okay, that's good. So I don't hopefully expect much questions because I see less compliance today, right? All right, so we're going to cover actually the following. I'm going to touch upon the risks of money laundering and terrorist financing associated with money service businesses. Again, there is a lot to cover, so in this 1 hour, we have tried to condense only the key elements, actually, to ensure that we are covering the topics on a very high level. And then we have, of course, importance of applying a risk-based approach. So we are touching upon, what's a risk-based approach, how to do a proper risk-based approach, using a proper risk assessment. And then we are going to deep dive into regulatory landscape. We have taken 2 major markets, UK and USA. We haven't taken EU. One is because Brexit, but no, that's just a joke. The reason is because, we follow EU still in terms of PSD2 and the rest of legislations, and in the interest of time. And then we have the power and use of RegTech, which covers actually all the, RegTech in compliance for MSBs. And then a high-level walkthrough given by my co-host Oussama in terms of what we offer from RemitONE's platform in terms of compliance functionalities. So let's begin the first part, which is the risks. Now, before we go into the risks, it's very important to understand what is the difference between money laundering and terrorist financing, because we always have this combined, right? Money laundering and terrorist financing becomes hand in hand as the compliance. So the key differences are the following. If you look at the source of funds, in terms of money laundering, the proceeds are always from criminal activities. The money is earned from financial crime. Whereas in the case of terrorist financing, the money can be legitimate. So the source of funds can be legitimate, right? In terms of motivation and intent, when it comes to money laundering, it's mostly for profit or monetary gain. Whereas in terms of terrorist financing, it's for ideology, political gains. Now, when we talk about type of activity, in terms of money laundering, it usually occurs after the criminal act, right? And in terms of terrorist financing, it supports future illegal acts, right? And then, of course, in terms of amount involved, usually what I have seen is, the ticket size of money laundering transactions are comparatively larger than those in terrorist financing. So now let's look at why money service business is a high-risk business, right? We all know all the regulations globally, they regard the money service businesses. We call it an MSBA or MTOs. They all are regarded as high-risk businesses. Why? Because they are very much attractive to criminals, right? And why they're attractive to criminals is because of this particular factors. One is its worldwide reach. So we all know that we are dealing with global money transfers. We have partnerships, on the sending side, receiving side. The ease of making cash transactions. If it's a brick and mortar, if it's an agent-based, customers can come in, just deposit their cash and we do the transactions. The one-off nature of many transactions. So usually customers are one-off in nature as compared to banking customers. And then the speed, simplicity, and certainty of transaction. All these are the factors that actually makes the money launderers, attracted towards the business. Now, key risk factors to consider. So when we are trying to do the risk assessment of any businesses, we need to look at the factors first. So we need to study first, as a business, who are our customers, right? Are they individuals? Are they corporates? Where are they from? What are they dealing with? Whom they are sending funds to? So we need to know the customer demographics. That's the first important element. Then comes the countries or geographic areas where the business operates in. So it depends. You'll have to comply with certain regulations, especially from the sending side, because that's where the regulations expect you to have the relevant licenses and payment activities covered under that licenses. The products or services, that's again important. So if I talk about UK, for example, a money service business can be a money remittance, bureau de change, or cash checking, right? And each of this is a product. So you'll have to identify then what are the risk factors, or what are the risks associated with each of these products rather. And then comes the transaction type. So let's talk about money remittance then. Are you going to offer this remittance as, let's say, only for corporates or for individuals, right? And then you'll have to again go further down to delivery channels, whether you're offering this as online or through a brick and mortar or it's a hybrid model. So all these are the factors that need to be considered when you are doing a risk assessment. Now, common risk indicators, I'm not going to run through all of them in the interest of time, but some key risk indicators. Customers usually are reluctant to provide details of their identity. And we have seen that, right, in most of our businesses, right? So that's one risk indicator for you if you are doing your risk analysis of your business. The second is reluctant to provide the evidence of source of funds. With the time, they're sending more transactions, they're reluctant to provide you with the source of funds, or probably the exact purpose of transfer, or they're unable to even identify the relationship or the exact relationship to the beneficiary that they're sending funds to, right? And there are, of course, plenty of others. There is significant rise in the customer's financial position. So over a period of time, you see that that customer comes and sends huge amount, or maybe splits the amount into multiple transactions. So this should be sort of the indicators for you as part of your risk assessment. And the size or frequency of the transaction is different from the customer's normal pattern. So, you have already captured his KYC, you know his background, you know what he's into, what kind of profession, what kind of expected earnings is, and all of a sudden, his financial position shows much sort of higher than what he's doing exactly. Couple of risk indicators from transactions. This is, let's say, are just below the threshold of due diligence. This especially happens as part of structuring, right? So if I want to send an amount, I need to just, I'll just divide it into small bits and send it, right? Appear to have no obvious economic or financial basis benefit. I'm sending it to an ex-beneficiary, and that ex-beneficiary has nothing to do with my business, let's say if I'm a corporate. Regularly go to or from tax haven countries. So that's again one common risk indicator. Information accompanying the payment appears to be false or contradictory. So that's again one of the risk indicators. and they are destined for money service businesses around the borders of countries at high risk of terrorism. And of course, the list goes on and on and on, but these are the most common risk indicators which we are trying to highlight as part of the session today. Now, let's talk about the importance of a risk-based approach. Why are we talking about risk-based approach? There are a couple of things. One is we all know that one size fits all does not apply across all MSBs. Each and every MSB is specific, right, to their business model, right? It depends on what type of customers they have, what type of products they have, what type of transaction types they do, what type of delivery channels they have. So all of these are factored, okay, into that particular MSB's business model. So the risk-based approach enables MSBs to focus on the high risks and try to utilize the resources or the limited resources, I'll put it this way, onto the higher risks. The risk assessment should be proportionate to the business model. So again, it goes back to the same first bullet, which is one size fits all does not apply. And apart from the AML and compliance risk assessment, it's very important for any business also to do a comprehensive business-wide risk assessment. And that's what we have seen, especially with the startups. They tend to ignore this part. They just want it, let's say, to cover the initial prerequisites, to tick the boxes, and then later on struggle with the comprehensive risk assessment areas. So there are a couple of areas like operational risk. For example, if you have loss of resources, loss of systems, what are you going to do as part of business continuity? And we spoke about some topics related to the same this morning with the other panel sessions. Counterparty risks. So if you're relying on just one payment service provider and that payment service provider or the bank decides to terminate the relation, then what you do, right? So you need to always have those kind of risk assessment areas handled in your business. And the liquidity risk, your financial position to grow the business, because obviously you don't expect the business to generate profits, right from the beginning. It might take its own pace. And then the market risk, the market conditions around you. So here is just one of the, I would say, approaches we can take towards a comprehensive AML and compliance assessment. I've divided it into 5 steps. Starts with step 1, which is what criminals might seek to do to your firm. So now that you have already studied all those areas about your customers, products, transaction types, delivery channels, so you have to start then identifying in these steps. The step 2 goes into how is the firm vulnerable? So how is your firm vulnerable? Because let's say if you're dealing with more of high risk jurisdictions, then you need to flag those as high risk and apply the relevant controls and measures in place. What red flags should be monitored? Again, it all goes back to what types of transactions you're handling and where. What controls will address these risks? Then you come down to, of course, all your controls. And this is where you start focusing on building up all your policies and procedures. And then you have to measure, are these controls effective? So it's good to have probably a 100-page AML compliance manual, but if you do not have a means to test the effectiveness of all your controls, then you're failing actually. Now let's go into the regulatory landscape. So I'll start with UK before I hand over to Kathy to cover the US side of it. In UK, we have the following entities mainly, which are responsible. As you can see, each one of them has a role and areas. So of course, every company that comes into UK has to first establish themselves. They have to register themselves with Companies House. Now, once that's done, then of course it depends on what type of services they want to avail. So if they want to go into money remittance directly, they need to then get the license from FCA. Now, FCA comes with different licensing types. They also have to register with HMRC for the purpose of anti-money laundering supervision, right? And then, of course, you will have to also enroll with Information Commissioner's Office, which is the independent authority, which is responsible to upload information rights. So anything to do with data privacy comes under the Information Commissioner's Office. And then, of course, for suspicious activities, all the entities are obliged to report to the National Crime Agency, which used to be known as Serious Organized Crime Agency before. So these are mainly the entities that, as an MSB in UK, you will be connected with, and you're obliged to basically fulfill all that they require you as MSB to do. Okay, so in terms of the AML and compliance legislations in UK, the Money Laundering, Terrorist Financing and Transfer of Funds Regulations 2017, or shortly known as MLR 2017, which is from HMRC, is the main, I would say, handbook that all MSBs need to refer. It has gone through a couple of revisions in 2019 and 20, but of course the handbook still remains to be as MLR 2017, which is available on the gov.uk site. There are three more, I would say, legislations, which are the Proceeds of Crime Act 2002, which basically defines the money laundering offenses, the Terrorism Act 2000, which again defines all the offenses related to terrorist financing, and the Counterterrorism Act 2008, which is to do with enforcing restrictions on those who are engaged in terrorism activities. In terms of licensing options with FCA, we talk about two types of, I would say, licensing here. Broadly speaking, one is the payment institution license, and the other type is the electronic money institution license. Again, they are divided into two. In terms of payment institution, we have something known as SPI, which is small payment institution, okay, and authorized payment institution. In terms of EMI, again, we have SEMI and AMI, which is, again, small electronic money institution and authorized electronic money institution. And in 2018, when the PSD2 came, as part of course, the new legislation, there were two new categories introduced by FCA, which are known as AISP and PISP, which stands for Account Information Service Providers and Payment Initiation Service Providers, which has led to that open banking boom that we see today. I would now hand over the mic to Kathy to take us through the maze of US regulatory landscape.
Thank you so much, Ibrahim. So it is a maze in the United States, the regulation. And what we chose to focus on was the licensing for your money service business today. But I did want to make the point that you are also required as a money service business to register with Finxplor, which is comparable to your national crime agency. You also, if you're a remittance company, required to follow certain requirements. I believe Leon spoke about them earlier from the Consumer Financial Protection Bureau, CFPB. And also, if you're a prepaid card and or a wallet, they also have very detailed regulations about your prepaid card information. What is the information that you have to have on your transactions? What does the consumer need to do? What are your fees? So very, very prescriptive in that. And I'll just make a note, because we've seen since 2019, 5 different remittance companies have been fined, and they're not in significant amounts. And we're seeing that they're fined for what I call technical requirements, right? So they're not because a consumer has complained that they haven't received money, that they didn't know where the money was going. They're getting enforcement actions, because they might have said their receipt should say total at the end, and it said charged. So, that's the kind of nuance that they are penalizing companies for. So we are really trying to make sure that companies understand how important it is to use the very specific language that they provide. It's not arbitrary, So it's just sort of a aside to what we're doing here. What I'm going to talk about is the state licensing network. And that's really the primary regulatory authority of all of the businesses in the US. The challenge for us is that we happen to have 50 states, and of which there are 49 different regulations. But in 2018, and this is here, I won't go through everything, but it shows you how long the initiative took. We started in 2018 to bring together the different state regulators as well as industry to come up with what we call a model law. Sort of what are the requirements that if you want to do business in the United States, that you could know what the requirements are for the net worth of the company, what's the insurance that you have to have, how often do you have to prepare audited financial statements. So all of that took a while, as you will see. We can go to the next page. But we think that we have come up with a collaborative solution that is being voted on in the United States and will continue through this upcoming year. So that model is, and if you're reading information in the US, is called network supervision. It means that the regulators in all these different states can now work together. I can share with Oussama, who might be in New York, and I'm in New Jersey. I can share, as a regulator, information together, which we couldn't before. So it's benefiting the regulators, we see, because everybody is under constraints to work more efficiently with less staff. So it's definitely something that's moved them into that direction. So the money transmitter model law was passed by the regulatory board last September. A couple of states have, in fact, passed it last year, and we are working as an industry group to push it into this state legislation system, which begins in January. We're doing some pre-work. We expect to have another, hopefully 14 to 15 states pass that law, and get another group in the next, in 2024. The state system is a little bit more complicated because some states only look at laws every other year. So it's you're sort of weaving through a complex wave in which you're trying to get this law passed. But we think it's very important, and it's the center of which this whole system will work. In the interim, if you are interested in coming into the USA, there is MMLA, which is a multi-state licensing agreement. And what that does for you is that there are 31 states out of the 49 that have committed to sharing information and approval. So there's the licensing process itself is broken into two parts: phase 1 documents and phase 2 documents. Phase 1 might be your business mission, you know, have you clearly defined that, your financial statements. Phase 2 may be a little bit more specific for each state, but by joining this process, you're cutting down significantly the elapsed time to get a license, because once the one state approves your phase 1 documents, all 31 will accept them. So that was a huge initiative that took place sort of as an interim solution. The second piece, well, we can go into there, but I'll just highlight the other piece that's interesting in conversations that I've had is people don't renew. You have to renew your license every year in the US, and there's all these fees and new requirements and reports that you have to do, and you also have to be examined. So last year, there was an initiative started called One Company, One Exam. So if you are licensed in 40 states, you only had to have one exam, and that exam was shared with those 40 states. So you weren't getting 40 different groups of examiners, whether it's remote or not, coming to you. And the tools that they're using is on there is SES. It's called the State Examination System. So that system is allowing you to upload your documents, and that's thereby allowing the regulators to share documents in a secure environment. And instead of uploading for 49 different states, you're uploading your year-end financial statements, which haven't changed, right? They're going to be the same, and you just have to do that once. Finally, which is a slower piece, is the actual heart of the licensing system, the NMLS. So if you are going to be licensed, your information has to be loaded into that system, which is old and was originally developed for mortgage companies. So it's not the most flexible. There's been changes, and there's initiatives to get that underway. So one of the things that also for licensing that I think is important that we talked about earlier, what are your options in the United States? So you can partner and act as, it's called an agent of the payee. So you can partner with somebody who already has their license. Some states have very specific requirements of what that relationship needs to look like. That is one of the things in the model law, the definition of the agent of the payee, the requirements. That is something that will be uniform. You know, right now you have to go, some states require approval of it, some states don't, so that's changing. The other option is for It's called an FBO, for the benefit of, where you can partner with a bank. And some of the fintech companies are doing that, partnering with banks and APIs in order to bring their product to market. One of the challenges that many of the fintech companies have seen is that, you know, the money transmission business in the United States was very state-specific and focused because, you know, companies grew up just servicing New York or just servicing California in specific areas. You know, the huge growth in online in development had made these companies nationwide now, but the state system wasn't set up for that. You know, it was very state specific in their consumers. They're not intending, I think, to give that up anytime soon because everybody feels that they know their consumers best. The licensing process, I just put some key things there. You know, required info is that you have to do a background, criminal background check, credit check, and timing. Some unusual things, I'll just give you an example. The state of Nevada, for example, one of our companies had to remove a board member who was from Canada because they didn't have a US work permit. So you get some very obscure requirements out of the states, you know, there that we'll hope to get rid of. Control and key individuals. So people in your organization, your chief compliance officer, your CFO, they're going to have to put together personal information, your financials, requirements there to change that. One of the big challenges that I talked about with the system earlier, the actual licensing system, is say you are merging with a company that was previously approved. It's almost like they didn't exist. You still have to go through that whole process again and revalidate that. Those are things that we are changing. And then this is just the supervisory authority talks about, you know, the supervisory getting into the one company, one exam, sharing information, and multi-state participation. So we're, I think, moving, but if you saw from the early slide when I started in 2018, we're in 2022 now, and we still have a bit to go, so. One of the things just to put up here, you know, Ibrahim talked about the risk-based, and it is very risk-based, the model law that we are working with. We did definitions. Another example is for prepaid cards. You know, prepaid cards might have been treated differently and defined differently in terms of stored value from one state to the other. So there will be a huge consistency in those law. And the other thing that was big for a lot of the fintech companies was that because of all the details that you had to provide, when companies were investing in these fintech companies, they didn't want to have to give. They're just sort of giving them money. I'm not managing the company in any way. Why do I have to, you know, give you all my credentials, my credit checks, and this? So there's levels so that unless you're ownership of 25% or more, if you're a passive investor, you don't have to provide that information. So that's really very beneficial to people that want to invest in the US and in companies, and you know, it was just so cumbersome before, I guess would be the word. And the future, so these are where we are currently and what our vision is. So everything is very manual. We have calendar year exams and 50 sets of standards and varying policies. Our vision is that it's going to be streamlined, and we've got that in place. The exam cycles are going to be risk-based and resource availability. So we're not just going to show up, the examiners are not just going to show up and, you know, overwhelm companies. They are going to use the information that's been there previously. Common policies, and we're harmonizing regulation that relies on technology and data analytics. And I know we've talked a little bit, maybe casually, on the data, but they're beginning to use these systems, and maybe you'll get into that, Omar, how important data is in these processes. But the regulators are also saying that, you know, by looking at a company and the data, we don't have to go in and examine them every year. We could wait every 2 years, and by giving certain reports, then we can see when in fact it's most important to do the examinations. I think. So that's my last slide, is my plug for membership. I tell people one of the things that we started doing this year is MSBA is a great way to keep track of what's happening in the US. You know, we meet monthly and we track all of the regulation at the state level as well as the federal level. We talk about trends that are happening. And if you're not licensed in the US and just want to do that, we have a nominal fee of only $1,500 a year. So that's my plug. So if you're interested in actually attending a meeting, see me, get my card, and send me a note, and I'm happy to invite you to one.
Thank you. Thank you, Kathy. All right, so now we talk about the next topic, which is the power and use of RegTech. How many of you are familiar with the term RegTech? Can you raise your hands, please? Okay, quite a few. All right, good. Okay, so what's RegTech? Those of you who know, I'm sure, that's the definition: the use of technological solutions to streamline the process of regulatory compliance. And why we are speaking about RegTech today is we have been speaking about it, in fact, on the panel sessions as well in the morning. And it has become more than important now to ensure that we have the right technological solutions to help automate the compliance processes. Because today, I don't think so there is any MSB that can survive without having a proper system in place for compliance, right? And that's the first thing that the regulatory also looks at, especially when you're applying for the licensing application. So it reduces, obviously, the cost and time spent on regulatory operations by the organizations, right? It leverages the latest developments and innovation. And why the RegTech has boomed, actually, and we know the factors, that's because of the rise in cloud computing, right? Because of the power of artificial intelligence and machine learning today, the big data that's available to us, and of course, the use of blockchain. So all these are I would say, the technologies behind that are supporting various RegTech solutions. Now, there are a couple of use cases when it comes to RegTech, and I'm sure some of them have been touched today by my fellow panel speakers this morning. One is the KYC and ID verification. It has become one of the very important use cases in the industry today, especially when you are doing an online onboarding of customers, right? So if you are doing through your agent, face-to-face, then you are just verifying the ID with the help of that agent, verifying and getting all the details. But when you're doing it online, it's very difficult to onboard a customer without having a proper ID verification tool. So there are a lot of tools available, such as GBG's systems that are in place for helping onboarding of new customers. Then we have, of course, the transaction monitoring. So there's a lot of rules that are built into the transaction monitoring system, again, which are set by usually the compliance team to monitor and to ensure that, okay, the business complies with all its risks. The risk profiling and analysis is another area. Again, here is where the power of artificial intelligence and machine learning plays a role. There is a regulatory reporting element to it. So there are a lot of reports that are required by different regulatory bodies. And there are systems today in place that can immediately translate all that information into the reports that can be straight away uploaded to the various regulatory bodies. And then, of course, the data analytics and predictions. So these are some of the use cases that we see very common as RegTech. This is just an example of a RegTech solution in action. So if we are having a mobile app today, which is non-face-to-face, right? It starts with first a customer downloading the app of that MSB, going first to register themselves. They have to, of course, go through this identity and verification checks. Once that's completed, they have to also, of course, do the two-factor authentication. Then once they have onboarded themselves and it's all successful, then it goes into the usual transaction cycle. And then, of course, there are additional elements, as you can see, that are available here, such as geolocation, client due diligence, and periodic reviews. The factors to consider when choosing an automated AML CFT solution, and that's very important for the startups. So it starts with, of course, whether the system has got the automated customer verification, right? So is there a mechanism in place that can verify the customer? Can it do the watch list filtering, which is again important, the sanction screening, the PEP screening. Transaction monitoring is another important element where, of course, it should give you the capability to define all the rules and then, of course, update the rules based on regulatory requirements, based on the risk appetite of the business. The automation of regulatory reporting, as I mentioned previously, also it's very important whether the system allows you to generate reports that can be easily sent out to the regulatory bodies. And then the case management flow should be built in, which should be again one of the factors to be considered when you are choosing an AML, automated AML CFT solution. And of course, audit trail is an important element. So these are some of the areas that, if you're looking out for a new solution, you should really take at least this as your minimum criteria based on which you can then decide whether you need to take this solution or not. So with that, I will now hand over to my other co-host, Oussama, who is going to take us through a high-level walkthrough of the compliance solution from RemitONE. Over to you, Oussama.
Thank you very much. Compliance. So it's scary, isn't it, really? If we think about it, I mean, it could land you in a lot of trouble. You can get fines and things like that. Worst case scenario, you can end up in jail, really. So compliance people find very frightening, but it shouldn't have to be, and it shouldn't be. There are things out there that can help us stay compliant. And the number one thing is really technology. So adopting a type of technology that's going to help us stay compliant and do other reporting to the regulatory bodies and other bits and pieces. Now, there are two parts of it when I say compliance and system. There is obviously the first part, is your system compliant in the first place? Right? So obviously it has to fall under certain regulations. Does it have built into it a disaster recovery? Does it have business continuity in it? Does it have firewalls? What kind of security you have around that? Today we're going to actually be focusing on the compliance of the actual payments itself. So not is the system compliant, but how does the system help you stay compliant when we're talking about what the regulatory requirements are to each of the individuals. And again, we have things like systems and softwares in place that can help MTOs tackle those challenges. Now, when we speak about payments and the payment being compliance, we're checking the information on that particular payment. And one part of that information on that particular payment would be the remitter. And of course, that's something that you'd be onboarding at an early stage. What we have in front of us is the onboarding form from the RemitONE software. So you guys can take a look and see what kind of information that is being gathered. So for example, you can get the remitter's first name, their middle name, their last name, their nationality, their gender, occupation type, suspicious activity, how did you hear about us, annual income, annual remittance. Obviously that's really important when we're talking about velocity, volume checks and things like that. Has he surpassed his usual remittance? Why is that? Why has he made that extra payment? What's it for? And we have IDs as well. Can take up to 4 pieces of ID. Of course, you've got a drop-down menu there as well. So we can take things like, it doesn't necessarily have to be a passport. It can be things like driving license, might be a national ID. That's also given. You may have also noticed that we have asterisks next to some of the fields, which means they're mandatory. And so each of those fields are mandatory. They could differ depending on which region you're in. I think that's quite important as well when looking for a software provider, that your software is flexible and it does cover your requirements in that particular region. If you work over multi-regions, you might have an API license that you're passporting over Europe, and each different area, for example, you might be working in Germany and France. Obviously, BaFin might have a slightly different requirement than France. And again, if your system can be adapted to that, make sure that you are collecting the correct information. Also, in the UK, we have sort of a 2-tier system where you can actually send a certain amount of money without providing too much information, like my first name, my last name, and my date of birth. I can send up to X amount. But if I want to send more money, I'll have to provide more information as well, and again, allowing that access to the clients. In terms of the ID, once the ID is collected, what do we do with it? Again, most regulatory bodies are going to require you to check those IDs. So at the moment, our system will ping that across, likes of GBG, they will verify that ID and send it back, as a positive or negative. We also have things up there like expiry date for that particular ID. So again, before that person's even made a transfer or turned up to your agent, it can send them a notification notifying them that, hey, your ID is about to expire soon. If you want to continue using our service, it's probably a good idea to come in the next time and bring more valid documentation, and we can check that as well. Also, what we do have carrying on the onboarding form on the right-hand side, of course, you've got their address details, and then you've got remitter groups which you can add yourself into the system. For example, you might find going along that this particular profile, he might be in a high-risk group, and then we can add compliance rules onto that group in general, and that will, again, have an effect on the type of payments he is able to make. While I'm on the onboarding section, I want to speak a little about, because we're on sort of the risk scoring and risk assessment. In this onboarding form, what you also may do is, depending on what answers they give in each of the section, you can give them a risk score. So for example, if I put my age down as 18, you might decide to give me a risk score of 5. I might put my nationality as North Korea, and you might want to add another risk score of 9 to that. And once I've completed this form, you might have a total risk score of, say, 20 or 15, and depending on what that risk score is, again, you can actually allocate compliance rules depending on which risk score they've fallen under. Apart from the one-time ID check, obviously, a lot of regulators expect you to do ongoing compliance checks. Yeah? So there's 2 ways this can be done. This can be either done on the stage of when they're actually making a payment, or what RemitONE is launching soon is ongoing compliance. So on each and every profile that you have on your system, every day there'll be a check on all the lists. Have there been any extra names added to that list? And if any of those profiles appear on that list, there'll be a notification that'll be flagged and sent to you for you to make an action. Do I need to check more details? Is it the right person I'm looking at? His address might vary and his date of birth might vary slightly. It might be an 8 out of 10 match, not a 10 out of 10. And I might need to do a bit more work. Or that's definitely him. Now I need to put a block on that person and report to the regulatory body, the authorities. Okay, that's a little bit small for you, so I'll try to read it out. Excellent. So this is actually the compliance rules engine. So this is more to do with the actual volume, velocity, the flow of the payment itself. You know, what kind of rules can we set up against each particular payment? So just going from the top, I can set rules up by source countries. So I can set one rule up, and again, I might have an API license operating over several regions. One country might have a different rule than another one. So UK maximum might be 5,000, but Ireland might be 10,000. So in the system, you actually set those up. It might not be what the regulatory body requires from me. It might be what I'm comfortable with. So for example, we have type of transfer there. So I can choose cash collection, and I can put a limit on that. So again, it might not be to do with the regulatory body, but I might not be comfortable with someone walking to my agent with a suitcase full of money and saying, can you remit this for me? However, if he sends it to me by bank transfer, that's a little bit more easy for me to find that source of funds. And again, I might allow that transfer. So the type of parameters that I can set rules up against, and again, this is quite flexible. I can set them up by not only source country, but also by destination country. I can set them up by agent. I might be working with several agents and not want to give each agent the same rule. A transaction type. Is this going to be a cash collection or is this going to be a bank transfer? Creation channel. Have they walked into an agent to build this transfer, or are they doing it through the mobile phone app? Do I want different rules against those? We've got service level. Is it next day or same day? Remitter registration type. So again, speaking about, are they fully registered or partially registered? Are they an individual or a corporate? We've got organisation type up there as well. Individual remitters, so we can put rules up against them. Remitter account details, remitter nationalities, source of income, and so on and so forth. And just below that, then we've got the amounts control. So I can say for any payment going to Ghana, the maximum per day is going to be £5,000. Because of course, humans are humans and we know what we're like. We try to break rules all the time. So if I say to you, nope, the maximum you can do per day is, or maximum you can do in the payment is £500, I might try to be smart and say, okay, great, I'm going to do 3 payments at £500 each. Yeah? And again, you can stop that from happening, saying, nope, the maximum you can actually do over that day is £500, and it doesn't matter how many payments you do. That is the total amount you're allowed to send over that period, or whether it be a day, a week, a month. And we've also got not just max send amount, we've gone one step further than that. We've actually won an award for our compliance engine that, I think it was IPR a few years back. So the extra added sort of mile that we've gone. It's not just max send amount, but max receive amount. And I think where this comes really into play is where we have aggregators who might be sitting on the payout side. So I might be sitting in Ghana, let's just say as an example, and I might have several MTOs sending me transaction instructions for me to pay out locally. So I'm an aggregator and I have RIA sending me money, I might have MoneyGram sending me money. Now the issue with that is obviously, you might have someone that needs to launder money, and because there's a limit with MoneyGram, I might run around to all the 5 transfer operators and try to send money to that individual that way, because they're not going to pick it up. All they're going to see is that I'm sending to that one person, so it's fine by them. So again, as an aggregator, how do I protect myself? Because again, what you can set is max receive amount, and you can link the beneficiaries. So no matter if one person sets up a beneficiary, if a second person sets up that same beneficiary, the system will recognize that as one beneficiary, and you can put a limit on the amount that they're actually able to receive. Below that, we've got what we call is that sometimes you want a payment to be flagged when it hits a certain amount, but not necessarily be held completely. You might want it to say that, okay, he's reached a certain limit, and for him to actually process this payment, I'm going to need a bit more information. So it's fine, you can process this payment, but I'm going to need an invoice from you. So again, through the system, we can set that up where if he passes a certain threshold, it's going to start to ask for added bits of information for that payment then to be processed and pushed through. So the next screen. There we go. Again, that's your failure message that you can put. The next couple of screens, this is actually one of our compliance reports that's been generated from our system. And I'll go through this with you just so you can see the type of report that our system generates and how it breaks it down. So at the top, I've just chosen 2 dates, and I've left this report open. I can narrow it down by source country, by destination country, by type of compliance rule that is triggered, but I've completely left it open. And it's telling me at the moment that there's been 34 hits or failures between those 2 dates, and it starts to break it down for me in different ways. The first section is not going to equal to 35 total exactly, because in one payment, I might have broken more than one rule. And it's telling me the type of rules that have been broken. So max beneficiary amounts been broken 5 times, additional points base broken 8 times, blacklist is 21, and 7 remitter blacklist. So beneficiaries 21, blacklist and remitters 7. Below that, they should all add up to 34 exactly. So it's going transaction type summary. Cash collection, there's been 18 failures, 2 failures for utility bill and 14 for account transfer. And then it's giving me the destination countries. So saying the majority are going to Bangladesh with 25 failures and 9 is to Nigeria. Below that, they've got the number 1 corporate, it looks like Amr Abedi with 28 failures, Entisar with 4, and then 1 with Ahmed Qasim and 1 with John Stansted. And then you've got further on down, each and every transaction and the information for that transaction. So we've got the time, the date, where was that transaction generated from? So you can see the top one, we've got ORM, which is the online remittance manager. So this one was built from the website. The one below that, Fast Exchange, that's an agent that billed that payment. The top one's a reference number at the time. This one was a cash collection. It's pending clearance. It's from UK to Bangladesh. Amr Abedi is the remitter. Afzal is the beneficiary. Source amount, total charges, remitter paid, destination amount. And then it's got the message. Why did it fail at the end? And what happened to it in notes? Again, the one below that, approved by admin, that one would have got pushed through, you can see. It's no longer held, sent for pay. Yeah, and it's been approved by admin. Then it goes to the last stage of being paid out. So again, guys, just to give you a general idea of what a compliance report should look like. So just really high level, guys, I'm sort of come to the end of my my compliance system piece, and I'll hand it back to Ibrahim.
Thank you, Oussama. So yeah, I think we'll open the floor now for questions. We can take questions now.
Yeah, okay, we have a couple of questions from, do you have more? Yeah, let's take a question from the floor.
Hey, I'm Ramona. I'm from Transfer Rapid from Romania. You said a few seconds before that you will have the possibility to identify the beneficiary when multiple senders will send money to him. How do you recognize, how do you identify the beneficiary? By their name or how?
So when they're building the beneficiary, they would have to put not just their name, there's multiple information that you put on there. For example, if I wanted to send you cash collection, I would have to possibly put your first name, your last name, possibly your address. There is sort of sections for that. If it's a cash collection, I'm probably going to have to say that you're going to be collecting your ID. Yeah, you're going to take your ID with you, and there might be some information about your ID. Now, when someone else builds that beneficiary, it will start to match them up. Yeah, and it might be a 7 out of 10 match, yeah, but it will let you know, like, there's a warning here. It might not be, but you just need to look into it a bit more. What the system has picked up is that they both have the same first name, they both have the same surname, they both got the same date of birth or address. And it will let you know what's matching, yeah, and then you make a decision from there.
Maybe I didn't understand well, but I thought you said that you have the ability to aggregate data from other services. I mean, if MoneyGram sends, if someone sends from MoneyGram and another person sends from another service, you have the ability to aggregate all this.
Yeah, absolutely. So it's all done through APIs. So if we look at it, that the RemitONE system is sort of the look at it as a central system, right? And through an API, our client that's using the RemitONE system, he might be receiving transaction instructions from MoneyGram, from RIA, and he's settling locally, right? Yeah. But he's getting it from several different, in our system we call them agents, right? And it will pick that up. It will know that across all those agents, it's the same beneficiary, rather, even if it's come from RIA or it's come from MoneyGram, it's still the same beneficiary, and it'll pick that up.
Thank you so much.
Okay, we'll take some questions from the online audience. Okay, would you recommend applying for an API or starting off? Would you recommend applying for an API or starting off with an SPI, then build your way up?
So it's a little bit of a tough question. It depends on the business and on the individual itself. I mean, the easy answer is start off with the SPI license. Reason being, it's a lower hanging fruit. There are less requirements from the FCA for you to fulfill before you attain that license. I think one of the main hurdles would be, for an API license, you are going to need to show the regulator, the FCA, that you do have a segregated client account in place or something of that nature in place beforehand. Yeah? And that's tricky to get without a license. So kind of a chicken and egg situation. So you want to apply for an API license, the FCA is going to expect that you do have this client segregated account. Again, it's a remittance account, not a business account. They're not easy to come by. Approaching a bank and asking for it, the first thing they're going to say is, yeah, sure, I'll give you one. Where's your license? So if you do have the funds and you do have those connections in the bank, sure, great, go for an API license. For the SPI license, they do not require you to show that you have a segregated client account. They do not require you to have any minimum capital requirement, unlike the API license, which I think is about 20,000 euros. Correct me if I'm wrong, for the API license. So you don't need any of that with the SPI. And what that helps you do is, okay, great, I've got my SPI license, I can go to Clearbank or I can go to Starling Bank and ask for a money transfer account and then sort of start my business. The other restriction is that there is a £3 million cap on that turnover from the SPI to the API. As a startup, you're probably not going to hit that anytime soon. It's ample for you to get your business going, start from 6 months to a year, start your reporting process, get your feet on the table, and then you can easily transition to the API license.
Just to add also, one thing important is, if you are looking at SPI, whether in UK or EU, of course in UK you don't have the passporting any longer because of Brexit, but if you talk about in EU, and having an SPI won't allow you to passport. So if you want to have, your passporting, services, then you need to go for an API directly within EU jurisdictions.
Okay, thank you. Another question. So what is the HMRC's position on using a private home as the listed premises for licensing, given that we are now well in the era of working online remotely from home?
Good question. I mean,
again, it is one of the requirements. So if you look at, and this is with any license, whether it be SPI, API, EMI, whatever license you're going for, you do need to provide them with your work address. They frown upon if you're saying it's going to be a resident. And we have to think why, and it's quite obvious, I think. We're going to be collecting sensitive data, sensitive information. Where am I going to be storing this? They don't like it if you're storing it at home. There's all sorts of risks involved there. Is someone going to break in and tamper with your network, or they're going to tamper with the IDs that you're collecting? I mean, you should be, again, as part of your license, collecting people's IDs. My passport, you should have a copy of that. You should be checking that. Should that be in your house so nice and easy for someone to reach in and get? Probably not. And I think they have the same view on it. So, I mean, it's a case of, even if you're going to rent, just again, you're a startup, even if you're going to rent a share space, it's probably a better idea. So you can receive your mail, probably a better idea than having a residence. It's a big no-no at the moment. I'm not sure, Kathy, is that the same with the US?
Yes, you have to have a physical presence that is not your home.
Not your home.
For your reporting.
Absolutely.
So
Doesn't
it can
have to be big, but you have to have a physical presence there.
So yes, I mean, there are two things which HMRC looks at. One is the registered address, which can be your home address or can be the correspondence address. But of course, there has to be a physical trading office address specified, because they want to ensure that the customers are aware of where this business is operating from. And if at all tomorrow HMRC or FCA wants to come to the premises, obviously it won't look good if they come to the home address.
Okay, so at least with the HMRC, they'll make a distinction between the registered address and the actual trading address. Yeah. Okay, another question. Can the RemitONE solution be used for transaction monitoring? Can the RemitONE solution transaction monitoring file STRs directly to FinCEN, FinTrack, or the NFIU in Nigeria? It's quite specific. I guess automated reporting.
FinCEN's US and FinTrack's Canada. I don't see why.
Yeah, so either FinTrack or NFIU in Nigeria. So,
Right.
But I guess the question is about automated filing of STRs.
Okay, yeah. So yes, for Nigeria, we probably have to take a look at what kind of report you'd like us to generate. I'll give you an example. At the moment, our system does have the AUSTRAC report, so the Australian governing body. I mean, we do have the normal compliance reports which suffice for your FCAs and your other sort of governing bodies, but some of them have a specific format they require, like AUSTRAC. AUSTRAC have a very specific format that they require for you to do your reporting. This is something that we have done in the past and we can develop it. So for an example, at the moment, if you're an Australian client, we have a button at the top. You click it, you choose the 2 parameter dates, and then that's it. You hit generate report. And it will actually generate that report in the format that the AUSTRAC requires, and it will post it to their website. So there's nothing manually for you to do there. So in short, yes, we can.
FinCEN has specific requirements as well. They all do. They just make it difficult.
FinTrack's Canada.
Yeah.
Okay, well, I think that's all. Are there any more questions from the audience? No? None? Oh, we have one over there. A last-minute question. Let's run over to him. Sprint as quick as you can.
Good evening, everybody. I have 2 questions, one for Ibrahim, regarding the difference between SPI and API, and the other one for Kathy, please. What happens in terms of white labeling? How does it work exactly in the US?
So
I think this question is that if I want to ride on someone else's credit.
So I'll take the first question of SPI API, Kathy, and then I'll pass it on.
go ahead.
So the difference, broadly speaking, between SPI and API is SPI is the entry-level license by FCA, which allows you to basically set up the business here, of course, provided you meet all the licensing conditions. It doesn't require any capital as such, all right? It's just a basic requirement, such as setting up an office here, having the MLRO, having the right sorts of, sort of directors who have the relevant payment services experience. And then once you apply, you get the license with FCA, you register with HMRC, and then you can operate. But the condition is that you cannot have more than 3 million euro worth of turnover on an average over preceding 12 months. So that's SPI, and you cannot obviously passport it also. Otherwise, you can run literally all types of payment services within SPI, which is within the context of money remittance, I would say. And then in terms of API, you have got minimum capital requirements starting from 20,000 euro, and depending again on how many types of payment activities you want to add. And of course, it doesn't have any sort of cap of 3 million euro on an average, just like in the case of SPI, but it also requires safeguarding, which Oussama also spoke about. So API requires you to have client segregated accounts. So you need to have that in place. And of course, the documentation required for API is much more extensive as compared to SPI. Again, in terms of resource requirements, it's the same. Whether it's SPI or API, you still need a full-time MLRO, you need directors, and that's how they look at the entire application.
In terms of contractual agreement with cross-border companies or smaller trusts, is it the same?
Yes, there isn't any difference in terms of SPI and API. The only thing is FCA looks at is the transactions need to either originate from UK or terminate into UK, because what they have seen is a lot of companies, they establish their licenses over here and they do not actually have any sort of business interest in UK. So we have seen lately so many cases like that. So you need to show that there is some sort of like fair amount of transactions happening, either from UK or into UK. And I'll pass on.
So when you say white labeling, I'll take it from the, if you're a remittance company and you want to provide that without getting the license and sort of partner with somebody to use your engine behind the scenes, there's really just two options that I talked about as getting a bank that will act as sort of the sponsor, and there's very specific contractual relationships between what the bank will do, what you will do, and how that's relayed to the consumer. They're hard to come by. They're not quite the same level as de-risking, but that relationship is hard to come by. The second area is acting as, if you have a technology and you want to use it as an agent of a company, be a large company, each state will, again, in this interim, have some specific requirements of what you have to do, and contractually, are you processing it? Who's holding the funds? I guess there's no straight answer in how that's handled in the US right now. There are solutions that are doing that, but they're very state by state at the moment.
In terms of the UK side, we do have something called RAS, Remittance as a Service, and it's kind of like a white label. So you'd approach a MTO, as an established MTO, and you say to them, rather than me going through the rigmarole of getting a license and getting a bank account and all this kind of stuff, can I ride off your coattails, basically? So I have my system, it will plug into yours, or I can white label your system with my company details, and then obviously I will go ahead. It's like a glorified agent, really, if you think about it. I will then go around and collect people and ask them to use it. But you're still going to be using the MTO's pipes. It's still going to go through their rails. They still have to do the KYC and the checks on the individual because they are the license holder, which in essence means they still own that client. So you don't actually own that client because you don't hold a license. So you're not required to do the checks. And again, the license holder is required, and they ultimately own number one, own the data, own the client, and they own that payment itself. That you take a slither of it.
That's a good point. A couple years ago, if you go to the state of Texas, there was a lot more white labeling, if you will, and they put a stop to, we called it rent-a-license in the U.S.
Interesting.
Companies were trying to rent their licenses to all these new companies, and they said, no more. And we're very prescriptive about if you are going to establish a relationship, this is what has to be done. And your point about them not actually having access to the customer data is critical there. Yeah. So it's tricky.
Yeah.
Hi, Kathy. I have a question for you. The cybersecurity law that New York State is imposing, what does that mean in terms of, what does it mean for MTOs there in terms of renewing their licenses? Is there anything we need to be aware of?
So depending on your size, your company size will depend on what level of certification that you need to go through there. They are making updates right now, but we haven't seen final regulations. The Money Service Business Association, in conjunction with several other large organizations, Western Union, put together best practices for AML. And as part of that, we put together, the last chapter is cybersecurity certification. What are those requirements for your program? Because New York and California tend to be those states that lead others. So while they're not prevalent in other states right now, we do envision that other states may have that same requirement. So they're outlined there, and you can find those on our website.
Thank you.
Would you say,
one
Kathy,
more
that
question.
New York
Is that
and
okay? Yeah.
California.
have the most amount of
One more question,
immigrants
sorry.
as well? That's something
Question to
Texas is big in there.
Texas is huge. Yeah.
question to both Ibrahim and Kathy. RegTech. Do regulators, in your opinion, believe in RegTech solutions? And if so, then is there any evidence? Is there any evidence to that shows that there's a direct correlation between RegTech solution adoption and regulatory approval? Do you see what I'm saying?
I'll go first. I mean, I do think that regulators believe in RegTech. There are some challenges at the federal level, for example, at FinCEN that we've been working with about, and this has to do also with AI. So how do you test that your RegTech, is working? I mean, I want to go to Oussama and use their system because I don't know all the ins and outs, and should I have to know all the ins and outs to prove that his system works? That's the question that we're sort of wrestling with some of these solutions, that the regulators would like you to prove that it works, but we're going to experts and we have to rely on them. So I think there's discussions going that will help it. I haven't seen approvals in the license processes. That's not a big thing that the state license people look at. Do you have an automated system for that? They're looking at core documents and processes, and that will not expedite your license per se, approval.
So in UK with FCA, they do consider actually what sort of systems you have in place. And I've seen it personally with the licensing options, So especially if you talk about API license, they look very much into what sort of capabilities you have in the system, how you're going to store the data, how you're going to encrypt the data, what sort of strong customer authentication process you have in place. So definitely RegTech plays a key role, And again, it all depends on the type of services you offer. So if you're on online service, obviously they expect you the backend also to be supporting that much of
Is a lot of that linked to PSD2, do you think?
Yes, since PSD2. And with the open banking, obviously the RegTech comes like hand in hand.
And on that note, let's hear a round of applause for our moderator, Ibrahim, Oussama, Kseibati, and Kathy Tomasofsky. Thank you so much.